Good morning, this is Mayor Walensky with Driving Markets. Well, there's a load to talk about today. All the markets went up yesterday, all the energy stocks went up, all the soft commodities went up, even the US 10-year Treasury went up, stocks across the world went up. It was very, very aggressive. So let's look at what is driving markets that's pushing the market so higher. So yesterday was mainly economic news. There is geopolitical going on. The war's still raging. Russia is still intensifying its battle with Ukraine. In fact, Putin is in a very difficult position now because the way he's come across such resistance is that's causing heavy losses on his side. However, in order to save face, he's still pushing hard on Ukraine. Let's look at the economic news. Yesterday, Jerome Powell gave his testimony, well prepared, off the sheet, read to Congress. And he basically said, in simple terms, that they do plan to raise interest rates, but not as aggressively as was suspected in the market. This is mainly due to events in Eastern Europe, and he's referring to the Russian-Ukrainian crisis. What you've got at the moment is you've got oil running at $112, $113 a barrel. You've got grains that will limit up. All the grains yesterday, the corn, the wheat, the barleys, which Ukraine and Russia are massive producers of those grains, and that supply chain will be affected. They went up between 5 and 8% significantly yesterday. You've also got stocks rose dramatically. Now, why did stocks rise dramatically? Generally speaking, what normally happens is that when oil goes up or a cost of energy goes up, then you normally often have the stock market go down. However, due to the economic reporting and the fact that ADP came out with the private sector employment, which is burning and bursting at the seams, where there's just not enough labor, all of these factors pushed up the stocks within the financial markets to the level of about 1.6 to 1.8%. So let's just analyze that in a bit more detail. I want to keep it very, very simple because yesterday one of my viewers said, who watches the videos every day, said, can I keep it more basic? And it's very hard to keep all the technical stuff basic unless you're a genius, and I'm not a genius. So let's just keep it very, very simple. All markets go up, all markets go down. And the regular everyday trader or investor, and whether they're holding a portfolio or whether they're a day trader, they just want to know, are the markets going up, are the markets going down? The long-term investors, they want to see that the markets are generally trend is going up. However, on that particular point, I want to make it very clear, basic to the listeners who don't want to get technical, is that the trend on the markets is going down. The trend is down. That does not mean that there are individual stocks that won't shoot up. That does not mean there are no opportunities to buy stocks, and that does not mean that investors won't come into the market and buy cheap stocks. So when stocks go down or shares go down, then obviously they become attractive to a certain type of trader, and that will push that particular stock up. So let's look at Russia a bit more meat on what's happening in Russia. Coca-Cola, 21% of Coca-Cola sales are to Russia, and they are now stopping. Boeing has said they're not going to supply any spare parts or any planes to Aeroflot, which is the Russian national airline. The sanctions are going to be biting hard into Russia. There's already queues of people standing outside the ATMs, the cash points in Russia, to take out whatever cash they can get, which is limiting now. Putin is limiting the amount of money that can leave Russia and the amount of money that the banks are allowed to give over in terms of their cash point ATM points of cash withdrawal. You've also got interest rates in Russia running at 20%. Now, if you take all of that within Russia, and you take all of the huge industrial conglomerates that are supplying the Russian economy, and they're going to stop supplying the Russian economy, then there's going to have a global impact on the profits of those companies that are selling to Russia and within Russia itself. So Putin has got himself into a very, very, very serious situation. In addition to that, one of my colleagues sent me a message this morning that Ulsha Asmanov's oligarch's yacht has been seized in Germany. So the West, Europe and the West, and America and the West, is going after the oligarchs. Roman Abramovich has put Chelsea Football Club in the UK up for sale for £4 billion, and he's claiming that that money is going to go to the Ukrainians. I personally don't believe that, because he's a very good friend of Putin, and I just can't believe that he's going to give his money to the Ukrainians, but that could be the case. Who knows? And if he does, good on him. So the oligarchs are now being chased around the world in order to either forfeit or have frozen their assets within whatever they're holding within any continent or within any bank account that they have. They're going to be frozen. So you've got an economic war, you've got sanctions, you've got an actual physical war, which is tragic for those people in Ukraine and in Russia, just to let you know. And we're not too sure where it's going to spread. Maybe the war will spread onwards, maybe it won't. I hope it won't, etc., etc. So where are we going from here? You're still going to have massive volatility in the markets. You're not going to get rid of the volatility. The volatility is going to be there. In fact, it's probably going to be further exacerbated. You're going to have increased inflation, and I want to be clear about this. I see inflation running at double digits by July. I'm making a statement clearly on driving markets. I see inflation running into double digits by July, and you're going to have interest rates by the end of the year of what I initially thought were going to be 2.5% to 3% before the geopolitical crisis. I think we're now going to be talking about 5% to 6% in the UK. In the US, you're going to have interest rates. Think about it. If inflation is going to be double digits, what will the central banks do in order to control that inflation? They've only got one weapon, and that weapon is reduce liquidity, increase interest rates, etc., etc. Okay? So I've tried to keep it very simple as possible. Remember, you either are a trader for the market to go up, or you're a trader for the market to go down. If the markets go in your direction, I would suggest in these days, take your profits quickly, because it's very, very volatile. Okay? I expect markets to continue falling further as long as the war continues, and be aware that you could end up running losses on a daily position if you run it too long. If you need to get hold of me, you can contact me on LinkedIn, on WhatsApp. You can contact me on Instagram. I'm doing Instagram videos as well. This is Meir Walensky with Driving and Markets. Have a good day.